This tutorial is for those looking to build wealth through group savings, what is popularly known in South Africa as stokvels. We will be focusing on using this group savings phenomenon as a long-term investment plan for building generational wealth. This is for people who want to make sure that their children inherit a portfolio of assets built over 15 to 30 years, starting from as little as 100 Rand a month to build a portfolio with property, stocks, and business assets. It is designed for those that understand that investing is a marathon, not a sprint. It is directed at making sophisticated wealth-building tools such as stocks, business ownership, and property accessible to everyone. With a bit of discipline, determination, commitment, and consistency, one can ensure that future generations have a solid foundation from which to build a family empire. This is purely a DIY process. Do not be seduced into those WhatsApp stokvels or those Forex and Bitcoin schemes that will leave you poorer going out than when you came in. There's no such thing as overnight high returns, except for the scammer themselves lining their pockets with your money. Be disciplined, be determined, be committed, and be consistent, and you'll reach a point when your money starts to work for you. We'll start with going over how to best set up your investment group and start building your capital. Then we'll go into how to draw up an investment strategy, that is, plan how you're going to invest your money once you've built up your capital. Next, we'll go into the most important part, the options available to start building your portfolio and a suggested way to go about it. We'll then go into how to organize your investment group to prepare yourselves to start investing and building up your asset portfolio. A breakdown of what your financials could possibly look like over time, then end off with various examples that demonstrate how your financials could evolve depending on the contributions you choose to make. Let's now go into how to start saving for your investment adventure. First, identify the right people to get into bed with, so to say. This is going to be a long road, so make sure you're in it with the right people, with the right mindset. We'll go into greater detail later in the chapter about the attributes of the right mindset for long-term investing. Secondly, define what your savings plan is going to be. Work out things such as contribution amounts, as well as how long you plan on saving before going on your investment journey. Thirdly, you would have to open a group savings account into which you will put your contributions. You will need things such as your constitution for your group, as well as nominated signatories in order to open this type of account. And then lastly, and more importantly, start saving and building up your capital. Here are a few important things to consider about step 1. Detailed here are a few important attributes that signal the right mindset for long-term investing. Spend a bit of time getting to know each other, assessing yourselves as a group and figuring out if your value systems are aligned. At this stage, you're just sharing ideas and getting to know each other. Give each other homework such as researching topics or identifying and meeting with potential mentors and advisors that you may need along the way. Naturally, as this process unfolds, others will show lack of commitment and drop off along the way. Eventually, you'll have the right group of people or thereabout, and then at this point you can move on to step 2. Step 2 is important because this is where you set up your management structure, draw up your constitution, plan your savings goals, and decide on important things such as contribution amount, yearly escalation, as well as the rules around assessment and acceptance of new members and exit criteria of existing members. The key roles in your management structure at this point are treasurers, who will be bank signatories, as well as administrators or coordinators to manage activities in the group. It may be prudent to rotate these roles every 6 months for the sake of transparency. Once you've agreed on all these factors, document everything and ensure that each member signs that they understand and agree with what has been documented. The next step is opening up a group savings account, or what some banks call the Stokvel account. It is important to remember here that you are starting out and the objective is to get going and build momentum. Remembering this is important because you will likely fall off your chair once you hear the interest rate the bank is willing to offer you. You can shop around, but it's generally quite low, very low. But keep your eye on the prize and just get started. The last step is to start saving. The point here is to use this time to build up your capital while acquiring knowledge about the various areas you can potentially invest. What is shown here is a 3-year savings plan. It doesn't have to be 3 years, this is just for illustrative purposes. The illustration here is to show how far you can go with 6 members, contributing 250 Rand each, with a bank interest rate of 4.5% with a yearly contribution escalation of 10%. We'll go through a few examples of these in section 6 with different scenarios to show how the finances stand, with more contributions, higher escalations, and higher interest rates. While we're still on step 4, remember that this is your investment journey and no one is going to walk it for you. So spend your savings time wisely, researching possible investment avenues. This is the time to gear yourselves up with as much knowledge as possible. It's important, however, to ensure that your knowledge is context specific. It doesn't help researching tax breaks in the USA while you're in South Africa, for example. Also, as much as dreaming big is strongly encouraged, look at your savings plan and savings goals first before you start dreaming about Airbnb, rental investment properties, beachfront on Clifton Beach. Acquire information and knowledge that's going to help you as soon as you have enough to invest. The more knowledge you gather, the less likely you'll be tempted by get-rich-quick schemes out there. This is a DIY project. Anyone that approaches you with promises that you'll sit back and relax while they make you a billionaire should be sent packing. Ask them to borrow you some of their billions and then invest them for you and see how that goes. Next, once you've researched, shared, and debated your newfound information and insights, narrow down your areas of interest in terms of what you can realistically achieve in your context. Once you've done this, allocate roles and responsibilities to do detailed research. For example, if you've chosen residential property as an investment interest, research which areas have the most rental yield versus property maintenance costs. Think about your context as well. How far are these areas, as well as any other information that relates to how you're going to manage this property successfully. There are trading platforms out there where you can just sign up and start trading. Also, some banks offer access to their trading platforms with their group savings account. Please avoid considering such until you've at least been in this process for 6 months to a year. Things can get pretty tricky if you're just speculating and you're not sure what you're doing. Take your time and make sure that you're setting yourself up for long-term success. Try not to gamble with your hard-earned money, which is what you'll be doing, going in head first without a plan. Next, we move on to developing your investment strategy. You start doing this once you've got your research and you're fairly comfortable with how things work for the investment areas that you have chosen. The first thing you need to do is to decide your profile as a group. Determine your risk appetite and how long you're looking to go before you actually need your money. This will largely depend on contextual factors such as the various ages of the members and so forth. Next, based on the knowledge you've acquired relative to your context, decide what kind of portfolio balance you'd like to have. For example, if you want to build a tangible asset empire, then you will lean more towards property. Please remember that this is just an example. You will need to use your own context and your research to determine realistically what will make sense for you. If there are people within your group that have an entrepreneurial flair, then you might consider setting up a loan or investment fund for members within the group. For example, a member starts a fried chicken business and needs 10,000 Rand seed capital. They put in 5,000 Rand of their own money, and the scheme invests or loans the other 5,000 Rand into that business. If you've decided on a loan, the member pays back X amount of money per month with X amount of interest for a given period back to the scheme. If it's an investment, then every month, over and above the group members' monthly contributions, the scheme gets 50% of the fried chicken business profits.